Hey, it's TSLA, and this is episode 299 of the Orange Pill Investor. And today I want to talk about whether we got to call 911 in 2026. Are we going to get the bear market? The Bitcoin cycle going to continue? Or are there catalysts at play and the cycle is over and it's just number go up forever? I've been trying to figure out a wealth preservation strategy. Like, it's one thing to kind of win the lottery and number go up, but how do I prevent the number from going down? I think is the name of the game at this point. What's up, Howard? What's up, K4? K4, do we like the bull put on MicroStrategy 17 January 370 350s? I mean, I think all of the bullish strategies aggregated are probably winners, but I mean, there's no number I can put on January 17th. 370, 350 seems pretty conservative, but I mean, if MicroStrategy is probably going to do these things several more times over the next year, and this pump doesn't have to be identical to the March pump, but we got this little hitch here and then it went up. We got this little hitch here and then it topped, and then we had a correction and we had a double top. If that all happens again, do we see another 500, pump to 500? And then do we get a 50% drop over the next 2 months? Right? Do we hit 500 and then we see 250 and then we see it pump back up again 50%? So what would that be, to 375, which is basically where we are now? Do we see 375 just sideways chop for 6 months? I don't have the slightest idea. I mean, I've got a bunch of debit call spreads. It's a small enough part of my portfolio that it shouldn't be the end of the world. But yeah, I don't have the slightest idea where we'll get. You can probably double up on that 370, 350. Is that potential max profit like a 2-for-1? All right, so I'm hoping this comes up on True North as soon as possible, and it's a long ways out, so there's plenty of time to speculate on it, but I'm interested to find out how many of the crew think that we won't get the same kind of bear market that we've had in the past. Bitcoin dropped from 60K to 15, so that's like a 75% drop. And MicroStrategy would probably follow suit and do something similar unless some of these catalysts are at play. But that's a little bit of a teaser. I should probably do business first, because in this account, I didn't address this when I was kind of taking profits the other day. I thought there was basically nothing that I needed to do here. But I've got this Tesla call here, and it's still got 6 months left on it. But I've basically, I bought it for a buck 72. A 10x would be selling it for 1,000, and I can sell it for 1,500. So this is kind of like what, a 15x. So I could just kick the can down the road on this thing, or I could just kind of continue my trend of being all in on MicroStrategy. So I'm going to take profits here on this one. It's going to give me a little bit of buying power. And then I'm just going to take a look at this. So I've got 1,000 shares of mining stocks. That's like, we're going to average this out and say that the average cost on this is like $13 a share. So that's 13 grand. So half of this account is in mining stocks. Okay. That means that the other half has got to be in MicroStrategy. In this one lonely 450 call that I put in, I was kind of hoping the price would stay around 450 so that I would be more comfortable selling covered calls against this. This is kind of risky here with a 0.58 delta. 0.7 is like comfort zone here. But I think if I follow the formula of taking the short strike minus the long strike plus the value, plus the premium collected should be more than the value here. So if I go up to the 550 strike, if I just add this value to this, that should get me in the ballpark. So if I go out to January 17th, that's 44 days to expiration. And I have the 450 strike. I can't remember if that was in April. Yeah. I got the 450 strike in April. And if I want to make a decision on it at 90 days to expiration, that's going to be right around the January 17th expiration anyway. So I kind of like the timing on this. This would probably be the last covered call I could sell against this position. And they'll both expire right about the time when I probably want to make a decision on that long call anyway. So I like the timing of this. So if I go to the 550 strike, I have the 450 long call. So I would take the short strike that I'm considering, subtract the long strike, which is 450. That's 100. Actually, that might not work. Plus the plus the premium collected, that gets me to 125, and that should be greater than the value of the long call, which is 100 in and of itself. So this does qualify. I could sell this 550 covered call for 2,500. And let's say I was opening up this, basically a calendar spread. I guess it's a diagonal. It's just so we can see the graph. If I was opening both of the legs at the exact same time, I just want to see that the graph looks kosher. I think it will. Yeah. So there's a big green here, and then this downward slope that's kind of leading towards a loss is not terribly steep. Like if I had red here, I definitely don't want to see that. So I think MicroStrategy would probably have to rip to like 2,000 a share or something by January, which it's not, could potentially happen. But I think this long call would protect me uh, in this scenario. This looks reasonable. But let me just go ahead and get rid of that one. And if I think about what the potential returns on this is, If I was to manage this within 2 weeks and buy it back for 1,300, that means I'm actually looking at keeping 1,300 in my pocket. Divide that by 2 again for it, to see what my weekly premium would be. So that would be like 650, which is not quite 2% returns on this. So could be considered a little bit greedy. If I only want to collect 1% a week, then I would need to multiply this price by 4 if I'm managing it in 2 weeks. So that's really like, 1,600 a share. So I can actually build in a bit more call away value, and this becomes even more safe. So I'm liking that. I'm going to go up to the 650 strike, but I think I could be way greedier on this if I wanted to sell the 550. I think that would have been fine. But I'm going to go ahead and sell this one. If Robinhood lets me, I think they probably will. Yep. So Robinhood's algorithm is going in and they're kind of doing a check. And Robinhood knows that I have this long call, and they're probably using it as collateral for this. Because if I tried to just go out and sell another one, let's just do it. Let me just try it and see. If I try to sell another covered call at that strike, or anywhere really, I'm pretty sure it's going to tell me I don't have collateral to do this. What did I sell? The 650? 750. 650. All right, so if I try to do this again, let me put something in that won't fill. I want to sell this for like 2,000. Just in case this actually does let me put this through, I don't want to submit it. Yeah, not enough shares. So it knows that I've already used this 450 long call as collateral for that option. And I'm not saying that that Robinhood's algorithm is going to be perfect and not allow me to set up a covered call that could potentially screw me over. I wouldn't use that as my primary check, but I like the fact that it let me do it once because it knows I have some collateral, but it wouldn't let me do it twice because it's basically saying, no, you don't have shares or you don't have a long call that would act as collateral for this bad boy. So I like that. That let me put $1,600 of buying power in my pocket, and now I have to decide what to do with it. Because cash is trash. I had an interesting conversation with somebody the other day about keeping dry powder. They look at trading as a business as well, and their experience was that dry powder lets them take advantage of unforeseen, opportunities, and that's probably it's definitely one way to do it. I just look at cash as being a melting ice cube, from a Bitcoiner's perspective. And that's why this is called the orange pill investor and not the fiat dry powder investor. I do need to make a decision on this I'm sorry, that's the one that I just sold. So yeah, I will make a decision whether to roll this or close it or whatever I'm going to do with it in the next 2 to 3 weeks, and maybe just hold it all the way to expiration. We'll see. Got a couple of these speculative debit spreads. This one got wrecked. Let's see, what did I pay for this one? Yeah, I'm up down about 50% on this. I could add another one and just like dollar cost average into it, but I don't know how much of a winning strategy that is. So with $1,600, what could I? Oh, I could get another. Yeah, might as well sell more puts in something. Let me add some more CLSK since I've got like twice as much. You know what? I should let me check and see what they're saying my cash is. They're saying I have individual cash 4 grand. I doubt it. I doubt that's the case. But I know I've got 1600 and I'm not using margin, right? It's currently enabled and available. So that means I haven't used all my cash. So I'm going to sell a put. Do I want to do it for this week? Is this even worth it? Yeah, I can get like 3% returns on 2 trading, basically 2.5 trading days. So that kind of makes sense to me. And saying I got 9,000 buying power, that's fake news. But I may do 2 of these. I know I can afford 1. So let's do 2. And see if it tells me that I still have. Let's refresh. And let's see if I still have margin available for use or if I am now using margin. Currently enabled and ready for use. Yeah, it doesn't even change my cash. This is just dumb. I have a love-hate relationship with Robinhood at this point. So let me sell another one. Five, four, three, two, one. All right, I'll sell it for a penny less. Sell it for 42. Let's just enjoy our day. All right, refresh. And let's see. Yep, okay, so that last one means I'm borrowing a little bit of money. So I'm kind of okay with that. I don't know if I'm using $1 of margin or, closer to the collateral of 1400, a 14 strike put, which would be about 1400 in collateral. So I'm using somewhere between $1 and $1,400 worth of margin at this point. And on a 25K account, that's probably reasonable. 10% would be 2,500, so it's not even like 5%. So I'm liking that. Nothing else for me to really do here. So let me go back to the whole reason is let's take a look at MicroStrategy. I'm just going to look back a year. Maybe I'll check the chats first. Let's look at 5 years. What's up, Junkrat? Junkrat says spent 700,000 on 990s last week. They're 990. They down 90%. You guys could. Good lord. 990s at what expiration date? That's wild. Yeah, K4's click on the big yellow Robinhood legend. I clicked it on one of my other tabs, and as soon as I landed on that page, I was like, "Oh shit! Now I have to learn a whole new page," and I couldn't bring myself to do it. December 6th is my last day of real work, so I'm resisting the urge to click that button again until I have time to just really figure out what I'm doing. Because especially during the videos, I don't want to be clicking around. I'm already having problems trying to figure out what I'm doing on the web version of Tasty Trade's application. So, what's up, AI gone wrong? All right, Howard says one idea why no bear would Well, I know bear would be that Sailor is buying for the next 3 years, but he's front run most of that, and we've seen in the last few weeks that his buying can't hold the market anyway. Yeah, yeah. I mean, unless he's literally just took his foot off the gas before we hit 100K. I don't know why he would do that. Like, yeah, I don't think he can totally manipulate the market. Dude face, yo, Soleil. I wonder if we do see a bear market, MicroStrategy buying mine supply plus ETFs, add sovereign, pension, and government treasury purchases, companies following MicroStrategy. Yeah, I'm going to talk about all of those catalysts. Um, and so this is the perfect time to do it. So I think the reason why we'll have a bear market again is for all of the catalysts that people have listed. So, MicroStrategy is going to go into this bear market in a position of strength. I've heard Jeff say that several times. So that will be interesting to watch to see if we know that MicroStrategy has been leveraged at least like what, 1.5x gains compared to Bitcoin. So it'll be interesting to see if they can temper that on the way down. Hopefully we get like 1.5x up and we only get 1x down. But I don't necessarily think that he can just step up his convertible bond offerings and he's just going to keep selling ATMs and he can totally prop up the market himself. But I think there's going to be enough people who believe it, which is going to FOMO the ever living shit out of the price next year. So I think, the nation state adopting, the corporate adoption, and MicroStrategy's convertible bonds and Mara's convertible bonds, I think these are going to give people a false sense of security that maybe the bear market is over. And this pump sorry, that's not March. This pump in March, apparently the market thought that the fair price for MicroStrategy over the next 6 months was somewhere in between like what, 125 and 170, right? So this is what the market really thought MicroStrategy should be worth, but it got FOMO'd up to 200 a share. So for all of those nation state adoption reasons and the halving and the supply and all of that stuff, I just feel like MicroStrategy is going to get FOMO'd double, triple, quadruple, 10x over where it'll eventually settle. And just this one pump took 7 months to unwind. It took the market 7 frickin' months to unwind this 4x. It was $50 a share ish, right? And it went to 200 a share in 5 weeks. So we 4x'd in 5 weeks, and then it took 6 to 7 months to unwind that shit before the market was like, all right, cool, let's go up again. So how long is it going to take to unwind this 4x? Because we had, what, 150 a share? And then it went up, not quite 4x. 4x would have been 600, but pretty close. So we got another 4x from 450. I mean, we could say 125 is where it bottomed, and we got a 4x from there. So we could just say it 4x'd again. How long is it going to take to unwind this? I don't know. It might go to 1,000 a share before we unwind back to 500. I don't know, but what I suspect, just based on the psychology of human beings, is that let's say that the fair market value of MicroStrategy in 2026 and 2027, let's say that the low point is $1,000 a share, then this shit is FOMOing in 2025 to 5,000 or more. I don't do price targets. I'm just pulling these numbers out of my ass, just ballpark stuff. So I think that nation states, corporate adoption, retail FOMO, the halving, the convertible bonds, all of this shit that people are thinking will eliminate the bear market just makes me think it's just going to um, just multiply the FOMO in 2025. And this shit is going to hit some kind of crazy blow off top that is going to catch people completely off guard. And there's going to be people right here. I'm sure there were people FOMOing into, what came out, the 1080s, right? The 1080s came out around here. I was buying some 1080s. But if you're buying 1080s for a week later, 2 weeks later, a month later, even 3 months later, those could all be completely wrecked. You could have FOMO'd at the top of this 200 pump as long as your long calls were 8 months, 9 months, a year later, you would have been fine here. As long as you just diamond hands through all this bullshit, you came out fine on the other end. But if you FOMO'd at 200 into weeklies, monthlies, 3 months, 6 months, every single one of those contracts was a loser. And in 2025, when MicroStrategy is at 1,000 or 1,500 or 2,000 or some stupid, ridiculous number, whatever kind of like the fair market value is that it unwinds to, it's going to be 2, 3, 4 times whatever that number is. And then does it, it took 7 months for $200 a share to unwind. It could take 2 years for some astronomical MicroStrategy number or some astronomical Bitcoin number to unwind. And I think my strategy has been kind of brute force. And Ryan has said something very similar. He's like, what if MicroStrategy goes up so much that it doesn't matter that it comes back down 50%? And I've kind of been thinking about it that way myself. Like, I want my account to just be so big that I don't care it drops 50%. But at the same time, that only works with the shares. That doesn't work with leverage. Because if you FOMO into shares, if you FOMO'd into shares at 470, 500, as long as you have a 4-year window, 5-year window, that's probably fine. Just like the lessons we learned with Bitcoin. No one has ever lost money in Bitcoin if they've held for 5 years. So, but there's no, as far as I know, there are no long calls that are 5 years out. I think I saw someone, I think there's some 2027s available in something. Let's see how far MicroStrategy goes out. Yeah, you can get some 2027 action. Just barely, you can get January. Now, I'm not buying any of these because I have no intention of owning leverage in MicroStrategy after, December 31st, 2025, and probably in advance of that. I do own some January 2026s, so let me modify that statement. I could, depending on what tax year I want to take profits, I could be exiting some long positions like the first trading day in January 2026 if I want to pay tax, postpone paying taxes on those gains an extra year. So let me qualify that statement. But it's basically 2025. And then I will be hodling a shitload of shares through the bear market, and I'll be selling covered calls against them. I don't know. Will I buy some puts? I don't know. I would much prefer to short a different stock that's correlated, like the Bitcoin ETFs or the mining stocks or, anything not named MicroStrategy, just in case. Because, maybe Saylor can pull it off. Maybe he can single-handedly frickin' stomp out the bear market. But I just think human psychology means that we see one. Because people can't help but FOMO in. And there's going to be people that are just leveraged. A lot of times people will put stops in at like 10%, right? So people that were buying shares at 500, they got stopped out at 450. All of those people took 10% losses. They exited their positions, and maybe they'll try to ride the wave back up again. But there's going to be leverage that gets extinguished. There's going to be stop losses triggered, and once that happens, it's just kind of a cascading effect. The momentum works going up, but it also works going back down. There's going to be a bunch of option positions that get wrecked. And I can't give financial advice, but I just hope that little bit of caution helps some people avoid getting wrecked, FOMOing in at the top. It doesn't mean panic sell, but long calls should be have time to be right. How you can't guarantee that you have time to be right, but I think it's fairly obvious that anything under 60 days is prime option selling territory. So that's automatic. Anything under 60 days is playing with fire. I get nervous under 90. And apparently 6 months wasn't even enough to save people YOLOing into this shit at 200 to share. You had to go at least 9 months out. So that's my take on it. I think human psychology is just gonna just FOMO the ever-living shit out of Bitcoin. We're gonna get a Godzilla candle. It'll probably look something like this, just this giant ass, rally into the sky. And I just hope I can catch. I mean, if I can catch some of anywhere in here, doesn't even have to be the tippy top, but if I can catch it anywhere in here, I will definitely be trying to. What do they call it? You trying to catching a falling knife or something? It kind of wasn't fair because this hit 500 a share, I think, in after hours trading, and then opened up down. So that was annoying. Like, you couldn't even really participate in the big pump. I think that's the way this went down. So that was annoying. But that's my 2 cents on it. Let's check chat and then call it a day. Junkrat, congrats quitting the grind. I appreciate it. I cannot wait. Friday can't get here soon enough. I'm gonna go out on a good note. I'm tying up some loose ends and making sure that I've transitioned everything well. So I love the team that I'm on as well. I love all my coworkers. They're freaking awesome. So I wouldn't want to do anything that put them in a bad situation. So definitely going to go out on good footing. AI gone wrong. Technically, the gamma trade with the CB will buy the dip when MicroStrategy dumps, thus dampening the dump. Not Bitcoin. Oh, convertible bonds. First, I was like Coinbase. Convertible will buy the dip when MicroStrategy dumps, thus dampening the dump. Gotcha. Yeah, I just listened to Matthew Krater's Bitcoin University, and he discussed how these bond traders, basically they're long, so they short it, and they're just end up delta neutral. And my eyes glaze over. I'm gonna have to study this for hours before this makes sense to me. I don't know why they would just give up that much upside, but I mean, I guess it's kind of like they're just hedging their position to the point where they're not going to make that much, but what they do make is almost guaranteed. They're just locking it in. So I guess that's what is it? Bird in the hand is worth two in the bush. Maybe that's how they look at it. And they're worth billions upon billions of freaking dollars. So I guess I don't know if that's proof that they're doing something right. Swole says, doesn't matter how big your account gets, a 50% drop is still a 50% drop. Yeah, exactly. I'm going to try to do some research on Chris Cole's Dragon portfolio. Supposedly he back tested his strategy like 100 years, and it supposedly it would make money in every environment, black swans, all of that good stuff. um, well, not necessarily it would make money in every situation, but it loses the least, I think, during the worst situations, and then it makes enough in the good situations to outweigh the bad. And he was like 40% gold and another percent in bonds, and then a certain amount in long and short vol. I need to do a deeper dive into it, but I thought, okay, the modern solution to that is just replace gold and bonds with Bitcoin, and then have some kind of equities, some kind of equity exposure. Um, and that actually reminded me a little bit of something that Jeff Park posted. He had like a 60-40 split, and he was using it almost not a metaphor, that's the wrong word, but he was applying it to every aspect of your life, like having kids is long, and uh, was it having a job? I can't remember if that was positive or negative, and I thought, okay, well, maybe the optimal ratio is 40% of the positions have covered calls against them. So you're 60% long and 40% short. I don't know. I'm sure I can take Jeff Park's ideas and merge them with Chris Cole's and add Bitcoin and shake it up, and maybe it'll spit out the Golden Dragon portfolio or something. So I've got all of 2025 to work that out and try to protect my account from dropping 50% in 2026 and 2027. So we'll see. Chunk, sa- Chunk says, if you're not crying, you're not trying. Oh, God. Yeah. Well, I guess I've been trying. Yeah, I've done less crying, but when you see your account go up basically 10x, it still doesn't mean that it doesn't hurt when a week or two later it drops by 30 or 40%, you know. Like right after I put in my resignation, my account dropped like 30% when MicroStrategy went from 500 back down to 375 or whatever. It's like, oh shit, maybe I should unquit. Uh True North, yeah, if there's space, I'll be there. But if some folks that haven't gotten much airtime show up, we're trying not to make it too crowded. Like the first episode or two, I think we had tons and tons of people, and that was just too many people per episode. So I think 4 to 6, 4 to 5, 4 to 6 maybe is the sweet spot. Any more than that, and it just gets, people just sitting around waiting for a chance to talk, or, not really getting to say much the whole time. So if there's only 3 or 4 people, then I'll jump in and be the fifth or whatever. But if we already have 5 or 6 that are interested in joining, then I'll just bow out and I'll just be lurking in the comments and maybe try to keep the crowd hyped or whatever. Junk says, need to get you and Dylan vibing with Jeff again. 4 seems good. Yeah, I agree. All right, let me scroll up and see some of these other comments. Let me see if I can plow through these. Dude Face, you got to check out Bitcoin University's MicroStrategy coverage. I was blown away. He is going through every point in the trade. The maxis are coming to MicroStrategy. Yeah. Now, he did fully, he came right out and said he doesn't own any MicroStrategy. He is a Bitcoiner, 100% orange pilled. He just owns Bitcoin. But I think he did give he gave honest coverage of MicroStrategy. But yeah, I think his entire audience, even just being, seeing that, him cover it, is just going to give a ton of exposure. Ralph says Saylor has a fiduciary responsibility to the shareholders to buy as much Bitcoin as possible at the lowest price he can get. Yeah, and I think he's said as much. Like he's not worried about how many strikes, long call strikes go in the money. Like he can't be concerned with people, buying these calls. And that's why, I love the leaps. I love giving myself a year to be right on those things. It's not a guarantee, but I'm way more confident about where the price of Bitcoin and MicroStrategy will be in a year than I am next week. That's for damn sure. Oh yeah, so yeah, I think you're saying the same thing. That is what he said he would do, and he is sticking to it. If he deviates, it will mean a lower value later as Bitcoin goes up and Bitcoin is more difficult to obtain. Yeah, I think he's been FOMOing about Bitcoin ever since he grokked it, however many years ago that was. You know, when the light bulb went off for him, you know, he said that he would just lay up at night trying to figure out how to get more Bitcoin because he's like, other people are going to figure it out and it's going to be too late for him to get cheap sats. So I think he probably still can't sleep. Like he's just desperate to get as much Bitcoin as possible before it's too late. Dude face, he bought every quarter of the bear. He won't stop. More importantly, the company won't stop. They might have to slow down. Yeah. Yeah. It'll probably be like a sine wave. You know, there's going to, you know, during the certain cycles, he's going to be able to just load up on more when the price is down. And, but at the same time, in the bear market, are the bond traders, do they get shaken out of their faith in the company when MicroStrategy drops 50%? I don't know. I don't know how they think. Dude Face says, I think he said, I'll buy the top forever. He did say that. Get more Bitcoin for the shareholders. Price doesn't matter. Yeah, he's got a 20 or 30-year time horizon. So not, I don't even think he gives a shit about the 4-year cycle. I, and he just needs to make sure that they can service the debt. That's really the only thing that matters. That's his primary fiduciary responsibility, in my opinion. And he just has to be able to not become insolvent. As long as he can service the debt, that's the number one priority. And then number two is satisfying number one, get as much Bitcoin as possible. Ralph says, agreed on the FOMO. MicroStrategy will exponentially grow larger the harder he hits the ATM and bonds now. Yeah, as much as he stacks right now, if Bitcoin hits another double, gets to 150, 200, 150 was kind of like my base case slash bear case, I suppose, for Bitcoin. But if it hits anywhere close to 500,000, MicroStrategy is going to be crazy. Dude face, even below NAV and at NAV, MicroStrategy was buying Bitcoin every quarter. That doesn't change. It may come again in 2027. MicroStrategy at 1 NAV. Right now we're at 1.8. Yeah. I replied to somebody. It was a tweet about the MNAV bears, and I said that if MicroStrategy ever is trading at a 1x NAV again, I'll sell both kidneys. And I guess I was only half kidding. I'll sell one kidney, but even if I did sell both kidneys, I could probably, at that point, I could probably afford some pretty good, dialysis machines. So maybe I can just walk around with a portable dialysis machine strapped to my back. But yeah, I don't mean that literally. That. What was it? McAfee, didn't he say something about if Bitcoin Cash isn't the winner, he'd eat his own dick or some shit like that? Like, it's not a literal bet. I'm not literally going to sell my kidneys, but I will definitely be mortgaging. I'll probably be taking money out on frickin' 0% interest credit cards if we're at a 1x NAV. I'll be doing the triple maxi MicroStrategy strat. Ralph says, buy a cheap out of the money long call over your covered call position. So if the price goes against you, you can sell that to capture the premium and offset the cost of a roll or buying back the contracts. I'm going to have to read that a couple of times. Oh, but a cheap. I don't know if you meant but or buy. But a cheap out of the money long call over your covered call position. Over your covered. You mean in instead of or in combination with? Buy a cheap. You can sell that to capture the premium. Okay, I'm going to think about that. Howard says they aren't in it for the unlimited upside. Must be, yeah. I'm going back and reading. Yeah, it must be a comment about the bond traders. Probably right. Dude face, Quant Bros did an interview with a hedge fund bond trader. Watch that too. Great explainer. Yeah, I'm a little bit behind. I mean, I just listen to content almost nonstop. I mean, if I'm not working, I mean, definitely when I'm walking the dogs, I'll walk the damn feet right off of my dogs. Just listening to podcasts. I mean, I've got a couple of Tim's interviews queued up. Um, I didn't even realize, was it on Quant Bros' channel or someone interviewed Quant Bros? Because I thought I was caught up on every Quant Bros episode. I usually get notifications, so I'm gonna have to check that out. I might be behind, but there's just too much good content, and it's hard to keep up with it. Dudeface says it makes sense why we had the pullback. They they issue the converts, the hedged bond funds put on the short, along with Citron and others. Retail followed. Now we are reconsolidated, or we are consolidating. Yeah, that makes sense. Lowering the NAV, buying more and more every week. Try selling puts for cash. You can sell 30% of the money 30 days and get 10% estimate. Yeah. Yeah. For the most part, I think selling the covered calls and the cash secured puts returns is fairly similar. But yeah, when we get these pullbacks, the cash secured puts premiums are pretty insane as well. Grant says there's massive short interest and we are still so high. Yep. AI God Rug says you could always buy a kidney later. Yeah, yeah. When the NAV goes back from 1x to 1.5 or 2 again or 3, yeah, I'll be able to buy a freaking. It'll probably just be like injectable nanobots. Like nanobots would probably just get injected into your system. It'll travel down to um, your renal vein and then just start filtering shit out for you. I think I don't remember if they had it or they were just somebody wrote up an article about what the future is going to look like, and you'll basically be able to just inject nanobots into your system and they will just take over for your lungs, and you'll just be able to sit at the bottom of a swimming pool holding your breath because the freaking nanobots are just going to go into your lungs, or just wherever, all over your body, and start uh, converting oxygen for you. So there's going to be all kinds of weird shit happening. So yeah, maybe I'll buy a nanobot kidney injection in 10 years. All right, I'm going to catch up on these and then we're going to call it a day. I'm going to go take a long lunch after taking this long break, and then we'll have to do some more work today before I call it a quits, but what are they going to do, fire me? Junk says, I'll say good day. Taking up too much chat. Cheers on the 300th episode incoming. Yeah, I can't believe it. I'm trying for 350 for the year. I can probably cheat and include all of the recordings that I do on True North, and I did some extra videos for my article that I wrote, which I keep adding videos to it. It's basically the options mega thread. Like every time I create a new piece of content that I think is essential, I'll put it in that options mega thread. I think I have it pinned right now, if anybody's looking for it. Minute says, thoughts on how much QQQ inclusion is priced in? Yeah, I think lots of savvy people know about inclusion. So this whole $500 a share that might have been the QQQ pump. And, there's a few people that are maybe hearing about it for the first time who are buying in, but I'll do an entire video on this one probably as well. But I read an article that somebody shared, and it was what happens to stock prices when they get included. And a lot of the times it goes down because the market has already front run it. It's, we can call that priced in if you want. So they front run it. They start sniffing this out like 6 months in advance. And so it's not a surprise, right? I mean, Ben's been tracking the QQQ inclusion for months now. And anybody in TradFi that's half paying attention should have been at least modeling what MicroStrategies, even if you say it's a coin flip that they get into QQQ, well, then you have to value MicroStrategy at a 50% chance of QQQ getting in. And that's more than it was 3 months ago at 125 a share. So was this QQQ? Was this rally the QQQ priced in inclusion? I don't know, but this article claimed that when something gets included in an index fund, it actually underperforms the stock that got kicked out. And if you just sold the one that got included, after inclusion, if you sold the one that got in and you bought the one that got out, when they do get kicked out, there is a temporary sell off. But if you were, I assume they mean if you buy that dip, whichever stock gets kicked out of an index fund, they immediately get sold off because now they don't have these passive inflows. But their claim was that, if you, in general, if you buy that dip, those stocks tend to actually appreciate more than the stock that got in. And it's probably because of that priced in thing that you were talking about. Is it gets front run, and then upon inclusion, some people just take profits. Minute Skills, thank you for sharing your thoughts. Wildcard is the Bitcoin breakout of 100,000 price discovery. Yeah, that's going to be awesome. Once we clear 100K and then 100K becomes the floor, that's potentially the next catalyst for MicroStrategy. The next, that's going to be the next, green candle that we see like this. That's probably the next pump. I agree. Dude face, it was Punter, Jeff, and this bond trader guide explains the short interest in a way I never saw before. Shorts on bonds are a flat position in one sense. Good to know. I'm going to check it out. Grant Keller right there is a fake short interest, but still. Yeah. Yeah, exactly. Because when the bonds are converted, now they get to take off their shorts. So I think Ben mentioned that too. Like a lot of this short interest isn't really short, it's hedged. So once those bonds are converted, then they remove the hedges and it just all kind of works itself out anyway. Dude face, the surprise is when the NAV expands for FASB accounting rules. First quarter, who knows? But then, yeah, and I was thinking about that too. I think my target date for removing all leverage is probably going to be the S&P 500 inclusion. So if we get a surprise and the price goes crazy, I assume over the next 3 to 6 months, however long it takes for the S&P 500 inclusion to happen, people are going to start front running that inclusion. And when MicroStrategy does get included into the S&P 500, that's probably my exit strategy with respect to leverage. I won't have any more debt. I won't have any more long call exposure. I will just be completely in shares. And if my shares drop by 50%, at least I can diamond hands for the next 5 years and just gut through it or sell covered calls along the way. But yeah, I'm in the back of my mind, I'm thinking whenever S&P 500 inclusion date is, that will be like, okay, it's priced in and it's time for me to exit all leverage. All right, Minute says you got the 434.50 call debit for January 17th with 1 to 3 risk. I mean, it's basically a coin flip at this point. 1 to 3 risk reward. I mean, I'm bullish in general, but I mean, so I think like if you run that play 10 times over the next year, I think you get it right more often than not and probably make money. But yeah, it's January 17th. We have a lot of anticipation around that day. Maybe there'll be a short squeeze or, some kind of gamma squeeze. So maybe the price rips. Great. I mean, I have some of those similar bets expiring on January 17th as well. So I've got some even riskier ones than that. Where are they? I've got the 660, 760 call debit spread. I've got what, 20 of the 800 900s, and I'm getting wrecked on these. Um, I think I'm down like 50% on these. So yeah, I have no idea. All of this short dated stuff is just speculative coin flip type shit. And so if it's a 1 to 3 risk reward, did you get paid more than those odds? That's the way that I look at it. So if I'm getting 1 to 3, then I want to pay less than 1 to 3. I want to, you know what I'm saying? It just all depends on how much they cost you. All right, that's it for now. Be good, y'all.